Welcome to Charts Today, US Open. My name is David Linton, and today's edition for Friday, the 9th of November, comes to you from London. We looked at the markets this morning. We saw Asia was heavily down, Europe's down fairly significantly, and the US has just opened lower, much as we expected based on the futures. So, dollar strength is still a theme in currencies. After the Federal Reserve's hawkish comments last night, the market is now expecting a rate rise in the US in December, and we're seeing the euro sinking lower on the back of that. Bitcoin is down 1.3%, so that's taken them bearish below the cloud. Still looking worrying, and we see here the Dow down 0.5%. So across the board, we're seeing falls, and the FTSE 100 is down 0.5% in London. In fact, 0.6%, that was the futures, the cash. So struggling today, and mid caps also struggling in the UK. The DAX actually not down as much. That weaker euro just helping matters a little bit. The biggest market faller in Asia was the Hang Seng, down 2.4%, and not a single stock in the Hang Seng index was up. Crude oil is falling lower. We're down 1.5%, but more significantly, we're below the critical $70 mark now for crude. So that's taking crude oil bearish and into a new bear market, given that we're more than 20% from our peak now. And WTI falling further as well, with further downside targets to go. So we're seeing here quite big falls. US nat gas pushes higher though, up to $3.67. So nat gas now closing at a 2-year high, and not a lot of work to do to take it to a 4-year high. So US nat gas prices now rocketing, and we're seeing that $3.68, and we've got targets to 375, 361, 347. So and 410 on the 60-minute chart. Taking a look at gold, weaker, down 1% on that stronger dollar, so that's selling off, and silver also weaker on a stronger dollar as well. US 10-year yield sitting steady at 3.21%, still in their bullish mode there, so looking a bit better there. Taking all this data coming to you from Thomson Reuters Icon, if we take a look at data coming from Yahoo, we can start by looking at the world indices, and this is coming in live for the market. We see the S&P down 0.8%, Nasdaq down 1.36%, so that's really falling away, having given up really all of its advantage over the Dow Jones. This is relative to the Dow Jones at 100. We're only now 3% outperformance on tech stocks, so that is really narrowing in. And if we look at the Dow, we see here we're down 0.61%, and so we are just seeing pretty much falls across the board there. And looking at the Euro stocks, we're down 0.41% in Europe. Going straight to the Nasdaq stocks, we can see here, if we just rank by name, we can see Apple down nearly 2%, and this has been quite a big concern in the market, about to go medium-term bearish, downside targets, and really fallen away. It's 10% down is relative to the market, so it really has fallen away quite significantly there. Google down a further 1.5%, Alphabet, Amazon down 1.8%, so we're seeing some pretty significant falls here. Facebook was a big faller yesterday, down a further 0.9% today, and we're seeing stocks like Tesla has been a good performer of late, down 1.25%, Netflix down 2.4%, and Microsoft down 1.28%. Spare a thought for Activision Blizzard shareholders. That stock down 13.6%, really taking a dive today. So very disappointing there. Just a quick look in Europe. We're seeing in the FTSE, we've got Imperial Brands and Informa up 3% and 2.5% respectively, seeing a reasonably strong performance from the pharmaceuticals. But on the other side, we're seeing Burberry down 4%, Anglo American down 4%, Glencore. A lot of these commodity stocks falling lower. And if we look at the 250, we see here, again, very significant falls here. Computer Center is a strong player, up 4%. Weatherspoon's continuing its relief rally, up a further 3% after big falls day before yesterday. And if we look at the AA, down 8%, Tullow Oil down 8%, Hilker Pharmaceuticals down 7%, Cairn Energy down 7%. We're seeing a lot of big falls here. Premier Oil down 6%. There's a theme here. A lot of the technology stock, a lot of the commodity stocks being hit by that oil price and the knock-on effect for commodities generally. Looking into Europe, we see if we look at ranking the 600, Glanbia is up 3.7%. Imperial Brands, which we talked about, is in that top list of the 600. Going the other way, we're seeing some very big falls here. Rubis down 12%, ThyssenKrupp down 9%, Tullow Oil down 8%. So we are just seeing that right across the board. There's some really big falls here. Looking across to the US again, we saw in the Nasdaq, we just ranked that by performance. There are some stocks that are up. Queret Retail, Monster Beverages is up 2%, and 21st Century Fox up 1%, but only really about 10 stocks in the Nasdaq 100 up. Activision Blizzard, obviously the biggest faller there. Take-Two Interactive Software down 7%, probably in sympathy with Activision, and Skyworks down 7%. NetEase down 4%. Seagate down nearly 4%. So we're seeing some very, very big falls across the board here. Looking at the Dow 30, we're seeing here the performances. Walt Disney up 3%. Coca-Cola, we're seeing a lot of the cyclicals up, the defensive stocks up. Coca-Cola up 0.6%, Verizon up 0.6%, and Walmart up 4.4%, and still a very, very good looking chart, Walmart. So it's not all bad, but if we look at the other end of the scale, of course, we've got Caterpillar down 2.5%. They've been hit lately. Trade war's not helping them. And Apple, we see down that 1.7%, recovering a little bit. Chevron, we're not surprised to see down 1.2% on that oil price. And ExxonMobil also down over 1%, and very clearly in bearish territory there. Just looking at the S&P 500 list, again, this coming from Yahoo. We see here CenturyLink down 13%, so some really big falls here, a pretty bloody day. And then best performer is EQT up 5%. Coty Group, we're seeing up 3%. NRG up 2.89%, and that's one of the better looking stock charts that we've seen. So they are out there, good upside targets, just have to keep an eye out. That's it for today. Until Monday, let's hope that the market can recover towards the close. Until then, happy charting. See you then.